Hi, I'm your educator for today. My name is Ryan Ferry, market analyst and trading educator here at Valetax. Before we go deeper into Forex, we need to zoom out for a moment and understand what the financial markets are and why they exist. The financial markets are simply places where money is exchanged between buyers and sellers. We exchange currencies between buyers and sellers as explained in episode one. If you're yet to watch episode one, please make reference and refer to episode one for better understanding. Financial market exists to exchange value. Buyers and sellers interact continuously, and price moves when one side becomes stronger, and every candle reflects a decision between buyers and sellers. When we talk about the financial market, we cannot take away the idea of bulls and bears. The bulls are the buyers and the bears are the sellers, just like the connotation of them. Bulls usually fight using their horns to lift things up, and bears fight by beating you into the ground. So those are buyers and sellers. And these two opposing sides are identified in the foreign exchange world and forex trading digitally as candlesticks. So the market works in a way where when one side becomes stronger, we profit off the strength of that side. So let's take, for instance, if we're buying GBP USD, if the GBP appreciates, which means gets stronger than the USD, and we are on the buy side, it means that we would be making profits. Buyers and sellers are constantly in a rift for the best prices to either buy from or to sell from. That is why they are constantly and continuously interacting. This market exists because people, companies, and governments are constantly moving transactions to invest, to protect value, or to grow wealth. So we take part in all of these events, and as stated in episode one, we make the value of changes in these prices when they are made. We also need to understand what are the major market types that are relevant in the financial markets and can be traded. So we're talking Forex, we're talking indices, we're talking commodities, and then we're talking crypto. When we talk about Forex trading, a lot of times it encompasses of all of these things together. So these are major market types that can be traded in Forex trading. So we can trade currency pairs, we can trade indices, we can trade commodities, and we can trade crypto. So for Forex pairs, we can trade major Forex pairs or minor Forex pairs like GBP USD or the GBP NZD. For indices, we can trade indices such as the US 30, which is the basket indices of the 30 most performing companies in the US, or the NASDAQ 100 or the Nikkei 40. For commodities, we can trade things like gold, oil, silver, copper, coffee, palladium. So we could trade commodities like raw metals or raw material resources. And crypto as well, in the advent and age of crypto in the 21st century, like Bitcoin, Ethereum, and Solana. And here are why beginners should focus. Because of how large the foreign exchange and the financial market is and works, traders actually trade price movements, probabilities are not certainties, reaction are not prediction. As traders, we're not trading the economy directly, we're trading price actions of what's happening in the world. So we don't necessarily need to predict the future, but we learn to respond to the prices that the market is showing us. And this understanding is what helps us stay calm in the market. And that is why beginners should focus on not trying to trade everything, because trading everything creates confusion. Mastery comes from repetition in one market or a few selected markets. Because when we try to trade too many things, we overwhelm ourselves. That is why we need to simplify and bottle things down. So understanding a few things and master them before expanding our coast and our horizon. Yes, there is a school of thought that teaches us to try out everything before picking a few things. And that is completely fine, especially when you're in your learning curve or your learning phase. After that, pick out a few things that you've noticed some level of progress with and trade them repetitively in order for you to gain mastery. Another thing you want to focus on is simplicity. Simplicity improves learning and also the speed at which you learn. So as a beginner, we want to start out slow, calm, and at a very good pace for you to catch up and understand better. Why Forex is often chosen. The financial markets are very interconnected, but Forex reflects global money flow. And as a trader, it is our job to want to understand where price sits and flow in that direction in order for us to become profitable. And because of the high level of liquidity that is constantly present and the smooth price movement in the market is why Forex is highly chosen aside other things like stocks and other forms of investment for retail traders. So we have high liquidity, we have accessible capital requirements, and we have a 24-hour, 5 days a week trading session that allows retail traders to actively trade within 5 days and 24 hours from different sessions in different various locations. The market is always active. And also because of the clarity of clear technical behaviors with price charts and movement that allows us to see what is happening on the price charts immediately and apply technical analysis to take advantage of opportunities in the market. This is why Forex is often chosen. Core lesson: depth beats variety. So this is to say that the more we can master a few things, the better it is than to try everything or to try trading everything at once. One market. Everything is under the financial markets, be it forex currencies, indices, stocks, cryptocurrencies, or commodities, all fall under the financial market. But we pick forex because of its volatile and liquid movement always. One time frame. It's important to know that when you want to start trading, it's best to pick a good time frame to understand the market. And one learning part means that when we pick between Forex, which is the core of this lesson, we are picking to stay on currencies before understanding the market movement, price action, technical analysis, the fundamentals, and then we branch out into other places. The knowledge gotten from Forex alone can be applied to every other part of the financial market because at the end of the day, it all requires us to have a certain level of technical analysis, fundamental analysis, and our ability to discern, apply risk management, and understand the market by applying technical analysis to spot opportunities and to make profits, to grow our capital and be earning well from the market. So thank you. We've come to the end of episode 2, and I'll see you in the next episode.